Hello everyone, this is Sebastian from Oracle Analytics. As some of you may have noticed, I haven't been uploading very much recently, and this is due to an abundance of schoolwork and some upcoming tests. Unfortunately, for the foreseeable future, I will probably maintain a heavy workload, so I won't be able to upload as much as I would have hoped. However, I will try to maintain at least one upload a week, cover the general market conditions. Now, without further ado, let's get started. My first analysis will cover the SPY, the S&P 500 ETF, and right off the bat, we could see that things aren't looking so great. Ever since the start of 2022, we've been in a downward trend. We've been unable to break above this resistance trend line up here. We got kind of close today, kind of nearing it, but continued fears with the Russian invasion of Ukraine have sent us down. We tried to break above this resistance today. Let's zoom in to the 1 hour chart so we can get a closer look. Yeah, as you can see here, we've tried to break above over here a few days ago. Failed, came back down to support, and we did manage to break above yesterday and today once more, but both times have ended in failure. We've been unable to hold this resistance as a new support line. So I don't really anticipate we'll retest this long-term resistance in the near future. The more likely case is going to be a retest of this. Probably a gap fill down here around the 430 region. And if we break below this 430 region, I anticipate 428 and this long-term support trend line at about 425. Let's zoom out so we can see it. This long-term support trend line stretches back for quite a bit. And if we manage to break this, then of course we're probably going to come back down to the 410 area and possibly even the 400 area where there's a gap fill over here. On a bullish note, however, there is some good developments on the short-term time frames. On the 15-minute chart, we could see a potential double bottom forming over here, but I would say things aren't looking so good. The futures aren't really reacting well. Like I'd say an hour or 2 hours prior to the recording of this video, Russia just struck a Ukrainian nuclear plant and set it on fire, but things have cooled off for now. I'll get into that later. Another thing I wanted to cover is an interesting little divergence over here. So this is the 1 hour chart, and we could see that there's two peaks over here. There's one peak, and here's the other one, and it's trending slightly upward. Now if we zoom into the RSI, we could draw a trend line from here, down here, and we could see that it's trending slightly downward. Now this right here, it's what we call bearish divergence, and it kind of, I guess, solidifies the idea that we might see some bearishness in the near term, probably tomorrow. If we do manage to see a bullish scenario, however, like if we do see a follow through with the double bottom, then we may retest this resistance up here at about 445 down to like 441. So zoom out a little bit. Now, if we do manage to break this long-term resistance, then I have high hopes for recovery, and we may even see new all-time highs. Now let's take a look at these moving averages and the Bollinger Bands. Right now we can see that the price action is currently like somewhere in the middle of the Bollinger Band, so there's some room to the upside and some room to the downside, although I highly doubt we're going to get up to the upper Bollinger Band due to the strength of this resistance trend line down here. Maximum downside potential would put us at about 420. And the fact that we got rejected from the 20 moving average over here, this yellow trend line, doesn't really look too well for the stock market. Moving on, let's take a look at the ES1. So this is the S&P 500 futures market. And earlier I was mentioning a double bottom, a potential double bottom, and you can see it's right here. This is the potential double bottom I was referring to. And we probably could have seen a follow through, but unfortunately this is around the time when Russia struck that nuclear plant, and it sent us all the way down to about the 428 region, and we did recover slightly about to this support down here, turn resistance about 434, but we have been unable to breach above that, and we have been unable to breach this 20 moving average on the 15-minute chart as well. So things aren't really looking too great, but we'll see how the futures market plays out overnight because it's going to be daytime over there in Ukraine. Moving on, let's cover the QQQ. Zoom out a little bit to the 1 day, and here we could see that the QQQ very closely resembles the SPY, although it does experience more volatility since it is the growth sector, and growth is going to be impacted the most by inflation. Today we did manage to close above support, barely. We did hit it. Like with the SPY, we've been unable to close above this 20 moving average. Honestly, I would personally hold off on betting on a bullish recovery at this point with, the Russian fears still continuing to progress and inflation talks. FOMC meeting coming up around March 15, March 16. Powell's going to come out and discuss plans for rate hikes. I think the next few days are going to be racked by increased volatility, potentially. We might even see another drop down to the 318 region. And if we manage to break below that, then next stop is probably going to be about 300. We could see that we have a lot of impact points over here and over here. So that seems like a very likely scenario. Zooming in, you can see that there's a little small resistance up here that we did manage to open above today, but we have not been able to maintain it. We got pushed down by the 200 moving average and the Bollinger Bands, and we've just been maintaining this channel ever since. Now, if this channel is a bullish formation, then hypothetically, we take the length of the run and then apply it over here. We could get up to the 368, 369 region, but once again, this is not conclusive, and we would have to wait and see for a close or several closures above this 348, 347 area. So I would hold off on any bullish bets for now. Next up, we're going to be covering the IWM. So to provide context for IWM's movement recently, not too long ago, we exited a channel up here. We did manage to get this max pain sort of scenario where we closed above resistance and hit new all-time highs, but this channel eventually failed to hold and we closed below it around the first FOMC meeting, and we've been stuck down here ever since. Like with SPY and the QQQ, the IWM hasn't been really healthy due to the fear surrounding the Russian invasion. But we have managed to maintain this 188 support trend line, potentially even forming a double bottom here. But without breaking the neckline, I don't have high hopes for IWM. On the bullish case, we would have to break above this neckline and this downward sloping trend line before we see some bullish action. Additionally, we'll also have to maintain this 20 moving average and try to get above the 50 moving average as our next goal. However, I highly doubt that this will occur because of converging resistances. Essentially, the Bollinger Bands, the 50-day moving average, and this downward sloping trend line all act as a resistance. So breaking above all three at the same time might be a little bit difficult. Looking at the downside potential, however, we could see that there is a gap fill at about 199. So similar to the SPY, IWM did receive some bullish sentiment with these candle wicks over here, so bullish tails. And this could even be considered a possible double bottom right here, 1, 2. However, overall market conditions probably won't allow for this double bottom to develop and play out. More likely than not, we might see a gap fill down here. And if we break below this gap fill, then our next target would probably be about this 188 region, which is our next critical support. Finally, we'll take a look at Bitcoin. Bitcoin, as of late, has been following the stock market. It's been trending down since somewhat the stock market peak around last year. And it's been really held back by this 44,000 resistance trend line. It even managed to form a double top over here. Strangely enough, it actually received a spike shortly after the Russian invasion. I anticipate that this is only a short-term recovery though. I think I would attribute it to Russian investors pulling out of their stock market and investing in Bitcoin due to the sanctions. And because of that, it's most likely a one-time type of recovery. As you can see, we hit resistance and now we're trending downward. I believe that if we are unable to hold these 20-day and 50-day moving averages, then we will likely see a retest of the support trend line around 38,000, 39,000. If we manage to break below that, then we're going to see 30,000, our lows from July of last year. But if we do manage to get above this 44,000 resistance trend line, then could see another retest of 46,000, which is another major resistance, as you can see with all the impact points over here, over here, over here. If we do manage to break above this little zone over here between this trend line and this trend line, then I would say Bitcoin will start to become bullish once more, and we could even get back up to the 50,000 to 60,000 region without much difficulty. Now going back to the SPY, let's do a little recap. Overall, I think the stock market is still in a bearish phase. I think that if war in Ukraine keeps getting worse, then we'll see continued downward spiral down to 410 or 400, our critical resistances. Now do keep in mind that there is going to be a Fed meeting coming up soon. This could potentially signal a turning point for the market. Like, for example, we might hit 410 or 400 by the time the Fed meeting happens, and after the meeting we might finally see a recovery. However, I wouldn't really keep my hopes up. Alright, thanks for watching everybody, and I'll see you around next time.